Good morning, everybody. It's Friday, January 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 2.5 at 457. March soybeans were down 6.5 at 10.05.5. And March Chicago wheat was down 5 at 540 3/4. This morning we had weekly export sales. Pretty disappointing for corn and beans at the low end of the below the low end of the estimates for both. 777,000 for corn. Beans were 484,700. Wheat also below the low end of the estimates, 140,600. Meal came in right in the middle of the pack, 203,800. And it was a good solid week again for the oil complex, 38,100. The upper end of the range was looking for 30. We've got yesterday USDA monthly oilseed report, another strong crush number, 210 million bushels of beans crushed. That's 5% higher than the same time frame last year. And corn used for ethanol was up 1.7% over a year ago as well. Dustin, little weaker overnight, certainly a poor export sales report this morning, likely due to some of the holiday breakups that we've had here. We will get back to normal next week, but I guess give us a few parting shots here for the week. We'll throw it around the room and put a bow on the week.
Yeah, thanks, Dan. We had a pretty strong week here. So for the markets to let off a little steam going into Friday wouldn't be that surprising, especially after those export sales numbers. The dollar index, just rocking here last couple of days. It's coming back off of its high a little bit here today. Euro's up, but very close to the dollar and the euro trading parity. Again, that's kind of a negative thing for commodities. Dollar denominated assets still have that. That January 10th report, that's going to be everything, I think, for the time being. Unless something changes, dramatically one way or the other in the Argentine forecast. And we did get some more rain in that week 2 forecast on the ECMWF. And that might also be some of this selling that we're seeing overnight, just a little bit more rain in the forecast. So, and then if you go try to look at the extended, it doesn't look too bad for the week 3. I know it's a pretty low confidence forecast, but there is time that if it were to start raining in week 2 in Argentina, that we could probably get by without suffering much losses there. And how much of this recent rally is due to that forecast? That's the question. So here we are. We're a couple cents off that high. March corn 457, traded 459 3/4 last night. It's the tie in the high. And going into the new year, I'd imagine it's going to look like an appealing price for growers to sell, rather than what they've been experiencing for the last 6 months. So if you're in that boat where you're kind of on or off about selling, think about the proximity of when you want to deliver that corn. If you're talking about this month, it's not a bad time to consider it, really, just because it's the highest price point we've had since June.
It'll be interesting to see too, as the farmers have been, by all accounts, selling into this recent rally. You've got a real-time fund long that's looking to be in that 220,000-ish type of range, which is starting to build pretty good. So it'll be interesting next week to see what their position is and how that market dynamic shapes up. We always talk about the market makeup, Dustin. And with them building this long position, you got, certainly crude oil's been rallying. So interesting makeup in corn right now.
Yeah.
For sure.
And I think a lot of people look at the funds and they always want to take well, that means they could sell out, right? That's the natural human instinct when you think of that. And it is true that when they do get caught wrong in a position, they do have to flip. I mean, think 2019, they were record short. They'd never been that short. And all of a sudden it just didn't stop raining. That caused one of the largest, quickest, flips that I've seen from what was a clear bear market to, a $1 blow off high. We were still in the midst of a trade war that year, so that was kind of it, and people kind of squeaked out the crop that year. But I wouldn't say that just because they're long right now necessarily means that they're going to have to get out quickly and start selling. But it does, start to limit the extensions that they would put on the market if conditions start to become favorable. We still have to go back to the fundamentals of what's available supply. If Argentina starts getting rain and good conditions to finish out a crop there, we still get their 16, 17 million metric tons of exports. And then Brazil just has perfect conditions all the way through April, May, June. Then we're probably going to be okay for a little while on world's corn supply. If either of those two things don't happen, though, then I think it does get very interesting. And I know I keep beating the dead horse of talking about global corn tightness outside of China, but we need to rely on all three to produce a crop this year to avoid tightness. And I think I look at last year as just a good example. We were we were a couple bushels above trend line, which trend line would have been a new all-time record. So we're 5 bushels above the previous record, and we're still talking about a year-over-year stocks decline, simply because our demand is just pumping right now. So I think the world is kind of laissez-faire on what can happen if corn runs just slightly below trendline yield in some of these locations right now.
Very good. Ben, put a bow on the week for us.
I feel like sometimes our morning conversation a little bit point and counterpoint with Dustin, but I think it's good to have, some differing ideas here as well. I think he's right. I think in the long term, there's some potential for corn. But to what he said about the length is there, what are the chances of extending? And I think we're at a point where they're going to have to be fed in some way via the report to show a yield reduction, increase in exports, something that can kind of counteract the natural tendency of corn to move in January and February, and then in January, February, and then into early March, as a lot of bills come due. So I kind of look at it as that I think the report is an important risk point in order to embolden the long to stay in here and to say, we're in pretty good shape. And to his point, they're not going to be heavily shook, probably unless we really get a strong close below, call it, the lows that we saw in first notice day, 428. That's going to be kind of in line with some of the earlier moving averages we crossed. So I think they need something on the report. It trades like they may get it. But a lot of us, last year, I think we saw some major spread corrections as well. And January, February doesn't mean that we can't correct those spreads and just watch the back end rise. So you get past that report, and then you have to deal with a new administration. And yesterday, there was a tweet sent out by the president-elect discussing tariffs and what a big part they're going to be and how successful they've been, and et cetera, with hyperbole. So I think those kinds of things will keep the markets on edge a little bit as we move into the third week of January once we get past the report.
Yeah, it's going to be an interesting sprint to January 20th for sure, and then before we know it, like we talked about yesterday, we're hard to believe, but we're going to be into February and start setting crop insurance pricing. So it goes by faster and faster every year. You veterans know that, Ben, these years don't get slower.
And admittedly, right, like my disposition, we talk about recency bias, I've got a little bit of, that feeling of what happened last time Trump was elected, and it kind of sits on the frontal lobe as we keep going higher and higher. I do think that we have a fundamentally different situation today than we had when this happened the last time. So maybe we can pick up some volatility. We've discussed how cheap options have been, and that's because our ranges are tight. It's been a very methodical trade. We move at a snail's pace. But maybe we can start shaking some things up and see some bigger ranges and trade a little bit more violently. at least on the interdays, because it has not been a fun couple of months. I mentioned yesterday 22 days for corn to rally 30 cents. I mean, that is
painful.
A turtle. Yeah,
no doubt. Happy New Year to our friends at AgYield Media as well. So happy 2025. So I don't know, they must have had a heck of a party. They're just waking up now on Friday, but happy New Year, guys. Rye, real quick here. Short bought Packer and weather certainly got cattle on fire yesterday, and hogs started slow and kind of tried to fight back a little bit. So why don't you wrap up the week for us on the livestock?
Yeah, you're exactly right. I just kind of felt like we were going to build that weather premium and Packers were going to have to come after it, and they certainly did. Looks like cash trade was around 195 to 196 in the South. It's been some reports of some much higher trade than that, but like, I don't know how credible that is. We'll see when the reports come out. But in the North, 198 to 199. So this is $2 to $3 higher. They're buying for a full week. And it just kind of seems like everybody was kind of leaning that they were going to have to come after it, especially ahead of the snowstorms that are coming up here over the next several days here in the South and in the Midwest. So I think, you fed the bull at every turn. You got the shorts on the run. You got the managed money long right now. So I think you just got to keep on feeding them from here. So any real kind of negative news, I think, on the cash front, could cause some real ripples. But other than that, it just seems like this has been one of those big kind of catch everybody off guard rallies in cattle, but good news nonetheless. And on the hog side, it just, we tested 80 again in Feb. It seems like that's right where the 100-day moving average is. There just hasn't been a lot of good news here. We've seen carcass prices dip. Belly prices were down sharply yesterday, over $8. Hams were down as well. So we're seeing the carcass start to correct, and we're seeing the managed money with this huge, still not record at this point, but still a massively long position going into a strange time of year and into a potential tariff situation. It just feels like maybe playing a little bit of defense here, but I think you priced in a lot of bad news for right now. And I think everybody's just looking to see where cash has got to be, and $80 seems to be right where the futures are, right where the cash is. And I think everybody's scratching their head trying to figure out what the right basis is, but I think there's for the most part, a lot of just caution with the size of the speculative long here right now as the fundamentals start to weaken up.
Very good. Appreciate the update. We'll be back with more next week there. It is Friday. It is everybody's favorite time of the week. Certainly it is for us as well. Bri, Fun Fact Friday. What do you got for us?
All right. Thanks, Dan. Happy Friday, everybody. Sorry about the sun in the background there. Jeez. Bad timing.
He's angelic.
Yeah, right? Wow. Sorry about this. But the last 2 weeks here, wow, with the holidays, feeling, kind of like a sloth here with all the eating, drinking, sitting around on the couch watching football. But, might not be as bad as you think. Did you know that a sloth can hold its breath longer than a dolphin? A sloth can hold its breath for 40 minutes underwater, while a dolphin can only manage 10 minutes. So take that.
That is wild.
Right?
How long can Ryland go?
I'm more like a dolphin in this regard, I guess.
So next time you're lounging around, you're not lazy as a sloth. You're just conserving energy like a champion.
Yeah, there you go. Nice.
Happy Friday, everybody.
All right. You had to go deep for that one.
Yeah, for sure.
Oh, very good. Thanks, Bri. Thanks to everybody that tunes in on a daily basis. We appreciate the support. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield, all the special content that we put out, and our day-to-day shows. So again, like and subscribe. Doesn't cost you anything to do so. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we look forward to talking to everybody next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.